What's going on, traders? Hey, just want to go over at this point and put a few do's and don'ts on W bottoms, also known as a retest and fail pattern. Well, first I want to go over what is the logic behind a W bottom. So, for instance, we have prices and they're making lower highs and lower lows, so we can state that this is in a downtrend. Just from the information on the chart, we can't tell if this is at major support or not. So just for this point, we'll just leave it as being at major support. Uh, okay, either in this time frame or a higher time frame. So the logic is we step up at this point. If this is the area of support, we always know as buyers at major support. The question is how many. So when these buyers step up, they try to rally it up, and they do it on increasing volume. But when big orders are put in, they just don't put in market orders. They have a order, a limit order, a stop limit up to a certain limit price, and few buyers bring it in. Then also a few people covered. So at that point, they only get a certain amount of their position filled. So they're also looking to get a second chance. Professionals know this, and so they're looking to get a second chance at filling this order. And so what happened here, we have a few most likely novices that missed all this move down, and at this point they see this and they look at this as a shortened opportunity because it is a downtrend, and from their teachings the trend is your friend, but the teachers don't say that the long line of exceptions. So at this point the trend is their friend, so they're coming in short here. When they come in short and when they get this bar below here and they go short, they're excited and they see this big bar, they're counting the money in the bank. But at this point, when it comes down to this area in and trades below, the bears are trying to take this low, and the bulls stepped up immediately. That's the meaning of this tail. This tail says that it was significant buying that stepped up here. As you see the volume on here, it outweighed this selling volume also. So I always take volume into consideration also. But when they stepped up, now you got these shorts covering their position. So the big money came in getting their second leg down because their positions are so big that a lot of times they can't fill it just in one while. So they're getting their orders filled. Then we got some shorts possibly covering because they're getting worried. Not all of them, but they're getting worried. When it comes back up in here, then we got some more shorts saying, oh, this is a downtrend. This is a second chance for us to get short again. So you got some trying to think, they're being professional and they got a second chance getting short, so they're selling it off here. So they're trying to sell it down, but as they're selling, you got the big money coming in, and when they're coming in, they're buying it up. All while selling it, they're buying it. And that's why this ended in a top and tail, but prices couldn't fall because as you got these novice traders trying to short it, the big money is bringing it up. And that's what happened. They see it. And so at this point, when it gets here, they're panicked after this bar and it didn't go down. Now you got short covering coming in and you got new buyers coming in. So whenever prices don't make a new low, this is not really an issue. So prices in the norm should continue to the next area of where they're sellers, and the next area of sellers is up here in this selling area. And I went over on another lesson what these pivot points was. This was a battle between supply and demand, bulls and bears, and this is a print of the battle. And at this point we see that the bears won at this point. So when the bears win a battle, they tend to stake out here as a base camp. So now they're holding the fort here. So this is where so-called the bears are hiding, the army of bears. So we don't know how many it is, but we know they're there. So when the prices get up here, they're stepping up and they're trying to short because they're defending their base. So pretty much that's how it goes. They're defending this camp over here. Now one thing, once price has reached this area, then this W pattern has pretty much been done and over with. Smart money got in here. Once in a while you get in here, the pattern's strong, then it'll pull back and it'll give you a second chance to get in up to this area. But once it reaches this area, this is what you don't want to do. You don't want to buy pullbacks once it already reached this area of resistance. Some buy it and anticipation that, oh, it could go higher, and sometime it do, but this is an odds trade. We trade odds, and so at this point this is not a high odds thing. So here it went sideways. By going sideways, when prices reach an area of supply, which is resistance, and goes sideways, usually if it's sideways at the top, it's trying to absorb the supply. That shows the strength, usually when it's in the upper range of the bar. But here it's trying to absorb the supply that's here. When it tries to absorb the supply here, this is not a pullback that I would be buying. I would need to break above here and close, you know, and if it was a better void here, then consider a pullback. But at this point, we have here is the camp, and here is also a camp, which some people fail to recognize. But as they step up and they try to buy, and right here at this area, it goes for one. The bulls give it one last rally, and what happened? It consolidates here again, and attempted to break out, and immediately the bulls step up. They defend the camp, and it reverses. So when you have W bottoms, your buying opportunity is here. This is the good one, an aggressive buy. And sometime if it's more room to move up, which we call a void, if it has a tradable void, then you'll look for a pullback here into this area of supply and demand. Or here, you know, usually between here and here, you look for an area somewhere and a reversal bar at that point to look to take a move higher. But once it's reached this, the odds is not as good no more. But some people say, okay, they still want to do it. They got here and prices came down, and this is actually today's, this is yesterday's, this is a 30-minute chart of the ES, and actually it went down here. And so as the pullback occurred here, you see this, and some people are going to buy the pullback because it's a pullback from a W bottom. A W bottom is just a way of buyers stepping up in the area of support in a down. Well, we'll go over that in a little bit more. I'll elaborate on when it's most potent. But the buyers that stepped up here to fade this to go long, they try to, you see what happened? It went down. They thought this was a pullback into a W bottom, and this pullback, it went down even further. So what happened is it already reached its target. All the interest, the big money interest was used up here. Now this is the next reference points where the sellers are interested in bringing it back down. So buying a pullback once it reached this point is not a high odds play. Now W bottoms are most potent at support in a downtrend. So pretty much the reason why at support in a downtrend, if you take a W bottom in a downtrend where there is no support, odds are it's going to tend to go up here right to this area and go back down. And all those people that was suckered in, I call it sucker bait, that was suckered into that W bottom is now going to have to cover because it's going to end up going lower. So usually W bottoms have higher odds play at support in downtrends. In uptrends, W bottoms don't need support. They form support in uptrends, and those are good odd plays. So if you're taking a W bottom, it needs to be at an area of support if the trend is down. If the trend is up, that increases your odds of the pattern continue going up if it has room to move higher and no resistance overhead. So those are pretty much the do's and don'ts with W bottoms. And one more thing I want to elaborate on, and then I know some traders think, well, who would buy a W bottom that's not a support? Well, say if this trend example, let me see. Okay, we could have just say a particular moving average, a Bollinger Band, or a fib number somewhere that could be happening, and those W bottoms that happen there. So what happens, since it's not actual support, a lot of times buyers will step up based on their method, and sometimes it works, and if it's in alignment with support is when it has the power. But when it's not, they step up and they buy those, and then it reverts back on them. And then a lot of traders can't wonder why that this didn't have any follow through. So those are times why buyers might step up. Now I don't know all the reasons why. There's so many different methods of trading why they would buy it when it's not at an area, but there's so many different methods that can't even explain it. But in the uptrend, the logic is, once again, it forms support as it goes. So if it doesn't pull back, if it has too much momentum, buyers are going to step up. They're not going to let it pull back to support. So they're not going to want to miss the play. And so that's the logic on how that works. Okay, traders, until next time.